Hi friends, welcome to RV Academy. See in 2019 section C, already I worked out section B. Section C, the first question is the following is the information of Tanush and company for the assessment year 18 and 19. The goods, cost of goods sold, tax relating to LTCG, depreciation, proposed dividends, income tax, net profit, buy sales, long-term capital gains, interest on government securities. Additional information, depreciation allowable for the year as per income tax is 50,000. Brought forward business losses as per books of accounts is 1,25,000. Brought forward unabsorbed depreciation is 55,000. Compute total income of the company under the normal provision, tax liability of the company, tax payable under section 115 JB. All these three should be calculated. First step, calculation of income of company under normal provision. Let me work out this particular problem. Now you can see the answer here. First I have taken net profit of 2,87,000. Add all inadmissible expenses. Just go through the debit side of your profit and loss account. All the expenses which is purely not related to business. Here, cost of goods sold is of course business expenditure. Tax relating to LTCG, long-term capital gain. Tax relating to LTCG is not a business expenditure. Add back to the profit. Depreciation 85,000 charged here, but actually provided in the act is 50. So that's why whatever I charge, I will add back to the profit in the first instance. Depreciation 85,000. Proposed dividends, any dividends, proposed dividends, provisions, etc. reserves is inadmissible. Proposed dividends 1,30,000. Then income tax paid, any taxes paid except GST is inadmissible. So income tax 60,000. When you add all this, it comes to 2,78,000. Oh, 2,87,000 plus 2,78,000 comes to 5,65,000. Now, income charged separately. Go to the credit side. Buy sales, it's a business income. Long-term capital gain, LTCG, 1,50,000 is not to be assessed under the head business. Interest on government securities, not to be assessed under the head business. So these two you minus. This has to be charged separately under the different heads of income. 1,65,000 minus, you get 4 lakhs. Some of the expenses which is purely allowed but not debited to P&L here. Expenses allowed not debited to P&L. Here depreciation allowable for the year as per IT Act is 50,000. This I have charged which I added back, and this is allowed as per the IT Act. I will deduct now. Brought forward business loss is given. Any business loss of the previous year brought forward is allowed as a deduction when there is a profit. Brought forward business loss 1,25,000. Unabsorbed depreciation of the earlier years means depreciation is allowed, but there is no sufficient profit to deduct. Now you can deduct. So 55,000. This is unabsorbed depreciation of the earlier years. Can be considered this year. Totally 2,30,000. The income from business is 1,70,000. The first part I calculated. I'll tell you the second two parts, that is tax liability and tax payable. Now you can see I calculated the income from business. Now I will calculate the gross total income and taxable income. Income from business, already I calculated 1,70,000. Income from other sources, interest on government securities 15,000. Gross total income comes to 1,85,000. Deductions under section 80C to 80U. There is no any deductions given here like donations, charities, etc. No deductions, nil. So taxable income comes to 1,85,000. On this I will going to calculate the tax. Computation of tax liability. 1,85,000, 25% is the standard rate. So 1,85,000 into 25%, it comes to 46,250. To this, we have to add health and educational cess at the rate 4%, 46,250 into 4%, 1,850. Now total tax liability comes to 48,100. This is the tax payable under normal rate. See, under minimum alternate tax, we have to calculate the book profit. On the book profit tax, we have to compute. How to compute, I'll tell you here. First, I have taken the net profit 2,87,000. Inadmissible expenses, proposed dividend, depreciation, IT. Proposed dividends is not a expenditure, it is a provision. Depreciation charged by business is 85 but allowed is something different, that's why add back. Income tax 60,000. Here remember, while calculating income from business, I have taken tax on LTCG. Here I will not going to consider that. So totally it comes to 2,75,000. Depreciation 50,000. Long term capital gains 1,50,000. Brought forward business losses 1,25,000. Unabsorbed depreciation 55,000. Totally it comes to 3,80,000. 5,62,000 minus 3,80,000. This becomes a book profit. On this book profit, minimum alternate tax standard rate is 18.5% on the book profit. 1,82,000 into 18.5%, 33,650. And to this I will add HES at 4%, 1,346. 33,670 into 4%, 1,346. That is called to be health and educational cess. Total it comes to 35,060. That is called to be the minimum alternate tax. But normal tax what we calculated is 48,100. Among these two, whichever is higher is supposed to be paid. That is 48,100 is higher, so we have to pay our company has to pay 48,100 as a tax. This is for 14 marks, one problem, computation of tax liability, total income and tax liability. In my next video, I will work out some more problems of the same question paper. Some of the book I published for BCom and BBA of BCU and BO for Skyward and Sapna Book House. Please make use of it.